Hi there, traders. This is Brad Gilbert with an early daily market insight for Friday, the 13th, right? It's one of those omen days that many traders will walk away from the screens. Now, just as we finish the North American wrap up for Thursday, it's good to see that the equity markets have pretty much had a sort of neutral sort of day, right? If anything, this calms the markets. Now, when you have big, strong, aggressive, trending markets, it can be very confusing. A lot of fear, a lot of volatility, a lot of unusual trading activity. So to me, a day where the North American equity markets, after the US CPI numbers came out strong, they've had time to digest the data, right? It's now sort of, they're trying to work out where to from here. Is it shock and awe, or is this the worst of it? And what else is to come? So I think this is a good aspect of, well, hopefully it sets us up for better trading conditions. My biggest concern was once we start free falling, the trading conditions sort of deteriorate so much that you can't really get in and sort of do things. Now, the clocks have reset not long ago, about 40 minutes ago, where it goes through 5 p.m. New York. Now, there's no sort of clear sort of synergy there on the majors just at the moment. But the good thing is the dollar's sort of stabilizing. It's not sort of shooting to the stars. I'll just give you a quick look at the charts. The dollar index obviously still sort of way up here at 104. Euro on its knees around 103.80. You've got gold dropping down through support there around 1822. Business as usual with oil back at seems to have found a bit of a hum around 105. And then here's the equity markets. Now, as I was saying, they're sort of stabilizing here at the moment. Like, the trend isn't going to change. And I still expect these to fall, but hopefully fall in a normalized fashion. The central banks don't mind the markets correcting. They like that. That's what they're trying to do, but they don't want to see free falls, right? So this is which is a good thing. It comes back, as I said, to making better trading conditions going forward, and we'll go from there. This is a nice sort of clean out too on the downside of Bitcoin. A lot of those cryptos got sort of belted yesterday. Stops triggered. It's back to where it was. We'll have to see if that recovers. Commodities still under pressure with the whole Chinese situation going on there as well. Currency land, it's, well, we've got the Euro, Sterling, Aussie, Kiwi, all sort of heading south, and the dollar pairs, besides dollar yen, heading north. Now, with dollar yen falling and the bottom pairs here falling, it's very clear that the yen crosses. It's a bit of a bloodbath on those things as well, right? So the whole carry trade, whatever you want to call it, with dollar yen is seems to be not necessarily over, but it's taking a massive hit. And if I just widen out that chart, you can see the extent of this move. I mean, it's come so far in a very short period of time from March. What is that? That's like almost 15 big figures, 16. So where do we go from here? Well, it's anyone's guess, but we'll have to see how it plays out from here. There's a bit of unwinding of some yen trades there for sure. Now, just having a look here too, like just as part of the central bank's sort of major role, they are also involved with trying to stabilize things. And there's an interview that just came out about not quite an hour ago, interview with Marketplace Radio. He's talking about what they would do, hindsight, they would have raised interest rates earlier. They want to get inflation back to 2%. Now, this is a hell of a task because it's still out of control. And the interest rate hikes that we've just currently seen won't sort of really kick in for some time. And there's a big imbalance between labor's demand and supply of product, right? And he sort of goes through that. So if you want to have a look up that interview. It's quite interesting to see where he's coming from. He's like, they're prepared to do more. I mean, it just sort of gives you a bit more insight into what they're thinking. They are sort of, it's not quite panic stations, but they are really concerned about getting inflation back down to 2%. Now, it's currently at 8.3 year on year. Now, as I said, these interest rate hikes won't really kick in for a while. There's still a chance this thing spikes above 9% towards 10. Getting inflation back to 2%, that's going to be a hell of a job. Now they've lost control of it. So since Greenspan, they've had a 2 to 3% interest rate band. Inflation gets above 3%, they raise interest rates. We're now above 8% and they're doing it, but I think it's far, far too late. So it's going to be interesting to see how it plays out and what impact that has. There's also just on sort of geopolitical stuff, sort of North Korea seems to be having a bit of a infestation of the pandemic. It's very strange that we are getting news out of there. So just keep an eye on that. It seems to be something weird happening in China, North Korea, whether there's an influx of pandemic or not, whether that impacts the global markets. China, anything impacting China is going to impact global growth. And that impacts commodities. You got to think weaker commodity pairs, Aussie, Kiwi, CAD, and overall high US interest rates. You're going to see equities come off and the dollar rally. So at some stage, though, the US dollar will become so strong that it will become so uncompetitive, and that's when the balance starts to shift again. But we're a bit of a way from that. So to me, overall, what have we got to look forward to today? Well, it's more about a bit of a calming, looking for opportunities. I'd get onto your charts and start drawing and tuning up all your support and resistance trend lines. You know, it's an easy one to work out whether you're looking at equity markets, right? So let me just get rid of my page there. So equity markets, as far as looking for levels to get into the trend, right? The trend is down. As I said, that's not going to change. But we will also see opportunities where we'll see squeezes, short squeezes. The market is short equities globally. That's sort of the way of it. Just with the whole inflationary process of the globe, all the central banks are struggling. So the Fed's had their turn. Now the attention is going to switch to the Bank of England, Bank of Canada, the RBA, RBNZ. Maybe not so much the Swiss National Bank or the Bank of Japan, but and the ECB, of course. We want to see what they're going to do with inflation, all these sorts of things, and that will take the pressure off the dollar and see these other instruments come into play. So that's what we've got to look for at the moment is opportunities where these currencies bounce, right? They are entrenched in good downtrends at the moment. Euro, sterling, Aussie, Kiwi. There's opportunities to get in, but you just got to be patient. Right, probably if anything, smaller trade size, and just give yourself some room to move to manage the volatility around the entries. Now, as far as coming out sort of today, University of Michigan sentiment prelim, you know what, that may come in and impact a little bit, but I think there's so much sort of I was going to say euphoria, news and stuff around those US numbers that it's really not going to come in and impact too much at this stage. All right, guys, that's it from me. Have a good one. Cheerio.